Good morning, everyone. Thank you for joining our June session of Wednesday webinars. I'm Dean Martino with the Cooperative Credit Union Association. Today we are joined by Vishal, Daga, and Nick Latino, co-founders of Confer Solutions, as well as Brian Regan, who's general partner at Service Ventures. Confer Solutions uses existing online channels to improve the relevance and convenience of your credit union products using flexible integration and existing legacy systems. Confer also allows credit unions to increase automation, reduce administrative overhead, and focus resources on where they are needed most. And I'm going to turn it over to Nick and Vishal.
Thank you, Dean. Thanks everyone for taking the time to join us today. We were excited to share a little bit of the Confer story with you. And sort of before we jump into that, I wanted to just thank the CCUA team for facilitating the session today. We've really can't say enough good things about the CCUA team and what they do for us, as I'm sure they do for you. And again, I think our plan for today is to kind of just walk you a little bit through kind of the Confer story in terms of kind of what motivated us to launch Confer back in 2024. And Nick and I are probably under no illusions, but probably the most interesting part of this today is going to be hearing from one of your peers and hearing about their experience with Confer. And so for that, a big note of thanks to Brian from Service for taking time to come and do that part of the session today. Before we turn it over to Brian, I guess in terms of, again, we wanted to start off by giving you a little bit of the rationale as to what motivated us to start Confer, because I think it'll be a good grounding in kind of not only what we are, but what we're aiming for. And then after kind of Brian presents kind of their experience with Services experience with Confer, we've got sort of a few product specific slides to really give you a much more tactical feel for what the product enables. So that's kind of the arc of the session today, and I kind of wanted to lay that out. In terms of before we jump into that, I kind of wanted to just step back and just really kind of ground what really the product is all about that Confer offers, right? And sort of at the heart of that product is what we called an offer engine. And really, there are two elements to the offer engine, right? So the first is being able to integrate with a whole bunch of sources, be it internal to the credit union or external, being able to get data from those sources, and then being able to apply sort of your eligibility rules to create a whole bunch of tailored offers across your membership, right? So that's step one. Step two is then sort of leveraging things like AI and e-commerce best practices to present those offers in a manner that they become more relevant and easier to engage with. So at the 50,000 foot level, that's really kind of what Confer is about. And as you might imagine, there's a whole bunch of different use cases around that. So we've got sort of clients that we're working with who are leveraging that to drive deposit growth, who are leveraging that same capability to create sort of more incentives and incent members to do things like enable direct deposit with them, and go on sort of journeys that create more stickiness, right? But the primary use case and the one that we're going to be focusing on today is consumer lending. And the reason for that is, most of our clients start there just because it happens to so significantly move the needle. And again, that's kind of what we're going to specifically shining a light on today. So with that, let me kind of jump into it, right? So again, sort of back in 2024, when Nick and I got together and decided to launch Confer, there were a couple of sort of themes that were top of mind for us, right? So one is sort of looking at sort of industry data and sort of, what had happened post-COVID and sort of the rise in sort of online adoption. Stepping back, I think looking at survey data coming out of FICO, Fair Isaac, again, sort of consumer experience has always been top of a consumer's mind. And specifically in the banking context, close to 90% of consumers saying, that sort of the experience that they have in engaging with their FI was just as important as sort of their products and services. And in a world that was becoming increasingly sort of more on digital platforms, that experience was defined into what was their online or mobile experience like, right? And therein was the opportunity, and therein lies the rub, right? So these consumers had kind of their expectations set by leading e-commerce companies, And so the fluidity of that experience, the smoothness of that experience, and the gaps that they were seeing with their FIs kind of created a lot of frustrations, right? And sort of looking at the data specifically, looking at sort of ABA survey data coming out of McKinsey and some other tech providers, when you look at digital onboarding journeys, even just a few years ago, there were still sort of very high abandonment rates, right? So online applications seeing 60% plus abandonment rates. When it came to loan applications, seeing abandonment rates that were north of 70% in some instances, right? And again, sort of the reason for this in our understanding was threefold. One is existing applications were very clunky, were very time consuming, involved a lot of data entry. Secondarily, sort of the experiences were not tailored, but more generic. So again, sort of creating frustrations on behalf of the consumer. And lastly, they weren't mobile optimized, right? So again, from our perspective, the opportunity was that you had a lot of people at your doorstep wanting to engage digitally, but sort of this opportunity was being fumbled given existing text. The other side of the coin for us was kind of stepping back and looking at sort of the mix between marketing dollars spent on acquisition versus retention, right? And sort of again, looking at some survey data out there at the time, we were seeing sort of dollars being spent on acquisition marketing mix was 50% greater than what was being spent on retention. And so while acquisition obviously will make sense and will always continue to make sense, this kind of mix felt out of whack to us, right? And primarily when you think about, getting an opportunity to engage a member who's coming to you over multitude of channels today versus having to go out and acquire somebody over, using digital advertising or what have you, that's way more expensive, right? And secondarily, if you have a data about an existing member or a prospect, being able to leverage that data in interesting ways allows you to convert them at a much higher rate. So that combination of, not having to spend on channels and being able to do a much more tailored, personalized experience to drive higher conversion usually translated into, ROIs that are 10x greater on the retention side. So there was an opportunity to rethink this mix. And then when we looked at sort of industry sort of leaders versus laggards, industry leaders based on survey data that we were seeing were sort of, much like 2x the rate of cross-sell upsell than laggards. So again, this felt like there was an opportunity to do something here. And then very concretely in the world of credit unions, sort of the thing that crystallizes this very nicely is sort of the indirect auto loan, right? So very frequently, credit unions are going out there and purchasing these indirect auto loans, having to pay north of 250 basis points in many instances, and sort of getting short-term benefit without these consumers turning into long-term members, again, creating a lot of wasted sort of return, if you will. So again, so these were sort of the big sort of themes for us. And we thought sort of, again, the opportunity for us at Confer was, look, you could really take these themes and build together a product that sort of emphasizes existing member relationships and turns that into a growth flywheel, right? So what are sort of the key components of that at a high level, right? So it's being able to leverage all of the data that you have on your members, be it internal, external, what have you, being able to stitch that together and to create personalized, tailored experiences. So things like pre-approvals are kind of nice because it gives you another element of personalization, but they also give you element of creating urgency and an opportunity to engage members where you wouldn't have one otherwise. And then regardless whether you're a pre-approval or not, it's about creating that efficient application journey process with minimal data entry that's mobile friendly, and stitching all of that together what effectively gives a much better member experience and reduces sort of the efficacy of your lending operations, from the cost of funding to the time it takes to lend. And while you're doing this, all sort of the whole while through, you're collecting more data, you're studying more data, getting more fodder to continue to make this more efficient over time. So this was really kind of the Confer thought. And really, like when we said, okay, look, we want to go do this and we want to go do this for credit unions, we knew that there were sort of, it's not that these are sort of goals that credit unions didn't have, but, what was sort of in the way. And so we knew we had to solve for these impediments, right? The few things that we were kind of thinking of that were sort of seeing what was stonewalling people, right? So one is siloed data, right? And being able to, data being stuck in legacy systems. So being able to grab a data in myriad ways, right? And then being able to flexibly integrate with those systems and often make up for legacy system gaps. The second thing we knew was that it wasn't just sufficient to take sort of an old school legacy application and just stick it online, because this is really speaks back to that conversion issues we were seeing everybody struggle with, right? That it really had to be built up ground up with sort of the modern consumer experience in mind. And the third thing, maybe, which is potentially underemphasized and what we had seen firsthand in our journeys in the tech world for the last 15 plus years, is that it's not just about sort of external experiences, but what is the internal staff experience, right? So it couldn't be a lot of these, there were some of these tools out there that were aiming for the same thing, solving for some of the gaps, but then internally required a lot of resources and a lot of effort to maintain and run, right? And from our perspective, that just sort of kind of shot yourself in the foot, as well as removed this iteration mindset, right? The idea being, if you can remove all the blocking and tackling effort, really where you get into is this: how do I put this out there? How do I learn from it? How do I refine? So those were sort of the key sort of technical things that we were building to. And really kind of that brings us to Confer today. And this is really kind of the product that we build, right? So it's the idea of having this engine that integrates into your existing online and mobile banking platforms, as well as your existing LOSs, and creates this front to back end experience that is much more smooth and fluid. So it's got AI and e-commerce best practices built into it, allows you in the world of consumer lending to do and blend and mix approaches between pre-approvals and invitations to apply. And then the other part, again, speaking to sort of the ease of use of the product, this was sort of a founding principle for us, was making it very simple to use internally, and allowing you to iterate quickly, because we realized what's out of the box is only going to be so sufficient. And then we wanted to give our clients the ability to tweak stuff on the fly and to do so quickly. And that's very much sort of built in how configurable the product is, but also sort of an operational mindset for Confer as a company. And the last thing I'll probably emphasize on this slide is, this extends not just to product and tech, but sort of this company philosophy even extends to how we basically sell and price our models. So while we started off initially as a standard subscription-based pricing model, what's pretty typical, we very quickly moved to a success-based pricing model. And what that means is that there is no upfront implementation cost, there's no upfront fees. Basically, we get paid based on success, right? So in this case, it's funded loans. So you control the underwriting, we control the experience, and we only succeed if you succeed. So this was kind of a way for us to put our money where our mouth is, and create alignment, much better alignment between ourselves and our clients. So with that kind of as a foundation, I wanted to invite Brian now to speak specifically as to kind of how this plays out in the real world and in the context of service.
Awesome. Thanks, Vishal. Great to be here today. Happy to answer any and all questions along the way. So don't hesitate to throw in the chat or interrupt me. I think it would be great to start off just to give everyone a little bit of background on Service Credit Union and myself and Service Ventures and what we do. For those of you who don't know Service Credit Union, put some real high level statistics on the page. 380 something thousand members, 6.6 billion in assets, 52 branch locations, pretty predominantly in the New Hampshire community. But one of the fun things about Service Credit Union that drives a lot of our strategy and who we serve is we have branches on the U.S. military locations in Germany. So we have a large percentage, an overall majority of our membership is here in New Hampshire, and that's really the primary U.S. community that we serve. We have a large number of our members who are deployed overseas in active duty military. And so, the credit union has a strong push for supporting active duty and retired military, veterans, first responders, those groups as well. And where the idea for Service Ventures came from, Vishal, thank you. So Service Ventures is a wholly owned QSO subsidiary of Service Credit Union. Our goal is to use assets to make investments or partnerships that help expedite the strategy or the strategic execution of Service Credit Union. So, while the credit union focuses on all things that the credit union should be focused on, driving value to the members, loans, all those processes, my job is really to be out there in the market looking for the partners that we feel, to use an analogy, pour gasoline on the fire of what Service Credit Union is doing. The real thing I like to talk to my board about and the executives here at Service Credit Union is, how can we use capital to solve what we consider tier one strategic credit union problems? And, when we look at that list, I think one of the reasons why, we invested or partnered with Confer is that organic loan growth is, top of that list. And, when we look at tier one problems or goals of a credit union, if you can grow organically without having to go, do things like purchase loans from the indirect market, if you can, more acutely solve your members' specific pain points, and you can save money while doing it, that checks a lot of boxes for the things that we're looking at as we're growing our credit union. And so I wanted to spend a couple minutes talking about the actual numbers impact that we're seeing at Service Credit Union with Confer's solution before we talk about the relationship on the investment side and kind of why we decided to invest. We try to keep those two things separately. There can be a great internal business partnership without an investment, but the best really check both boxes. So first, what we're going to show here is when Service Credit Union moved from our previous pre-approval, member pre-approval product to Confer, pretty instantly we saw a really large increase, about 3x, in the amount of loans that came through and were funded. I think Vishal said it, but I'm going to hit on the point again. One of the things that makes this investment or this partnership most attractive from a credit union standpoint is you're only paying based off of funded loan volume. So that is really the metric that we look at the most. And so, I think a combination of the team feeling confident in the offers they were able to put out there, the agility the team has for actually working with the programs, combined with the member experience, we see a drastic improvement, even in, frankly, different rate environments, for the amount of loans that were coming through and funded. The next thing we wanted to show was we have pre-approval campaigns, and those are performing very well. I think the other thing that we see is a large increase in funded loans through Confer's product, even for members that don't have a pre-approval. And so one of the things we were able to do is harnessing that technology Vishal talked about, taking best practices from all sorts of different software environments, and really reducing friction in the process for our members to say, I need a loan, whether they are pre-approved or not. And so we're seeing drastic increases, 1.5x in the funded amount of loans for members who don't even have a pre-approval that is being actively marketed to them. So I think those two things alone speak to the value of the partnership from a credit union standpoint. Again, these are all members coming from, these are all loans coming from our existing members. And so as we think about how we want to grow as a credit union, deepening the relationships with our members and solving our members' pain points, the more we can solve internally for them, the less they're likely to go try to find somewhere else. And so it's been a very successful business partnership with Confer. Frankly, when we think about ROI of this project, I'm confident in saying over 1,000% ROI, and one of the best ranking ROIs that we have through partnerships at this institution. Great. And then, thinking of the commercial relationship being one side of it, why did we decide to invest in Confer? And, Service Ventures, like I said, our main goal is to drive the strategy of Service Credit Union, but we also want to make sure that the investments we're making are going to have success in the credit union industry in a more broad way. And so when we're going through our proposals for investments, there's a lot of things we look at. Obviously, there's some basics in there. One is, how's the technology holding up? And especially in the days where everyone's talking about AI, right? Like, how defensible is this business, and how much does the technology actually put into driving the results? Obviously, step two, we have clear results. We know that when this product is adopted inside of a credit union, one, there's quick time to value, and two, it's driving a meaningful return on what we call one of those tier one problems. And then, the third part, which is one of the ones we spend the most time on, is how is this product uniquely solving problems for the credit union industry? And so, we spend a lot of time together trying to figure out, even things like the funded loans basis, the funded loans pricing model. Great. That enables this solution to be adopted by credit unions as large as, service credit unions, 6 or 7 billion and larger, but also down to smaller credit unions who are also trying to find ways to grow organically and help solve problems for their members. And so I think the strategic alignment here was a big piece for us. One, it's obvious through their work and the way the product, the way they partner with service credit unions, they are committed to the credit union industry. But in a broader sense, how does this affect the entire industry? Things like the pricing model or their marketing message or how they interact with members is a piece we spend a lot of time on. And so in cases like this, where we feel, one, there's a large impact to our institution, we can prove the value of a solution. And we believe that there's that, it checks all the boxes for great ROI, obvious tier one problem for multiple credit unions, and a founding team that wants to work to bring this to the credit union industry, we will make an investment. And so it's been a great partnership with Confer so far. I think, their flexibility in helping drive value with our team and the members has shown, like I said, ROI of over 1,000% on this relationship, not even including anything on the asset investment side. That's purely like a business ROI. So yeah, it's been a great partnership, and I'm excited to see them expand working with even more credit unions and driving value across the ecosystem.
Thank you again, Brian. That was great. I'm going to tee up my co-partner, Nick, to actually do a little bit of a closer look at product next.
It's great to be here. Thank you, everybody. So I'll kind of just jump into it. So as Vishal kind of touched on at a high level, we really have an offer engine, right? So the first step is, generate all the offers that you can for your members, that regardless of relevancy. Just try to generate as many offers as you can, right? And all of our customers today use us for pre-approved lending, because of course that moves the needle for them, but it actually isn't, it doesn't have to be just for pre-approvals. Like, you can use it for deposits. You can use it for linking external accounts. You can use it for setting up direct deposit. It really doesn't matter. The engine doesn't care what the offer is, but pre-approvals, of course, is a great one to use. And we definitely recommend all of our customers using it for that. But that's kind of step one, right? Generate all the offers. Then the step two that comes around is this AI model that we've been talking about, where essentially we're trying to figure out, of the members that are logging into online and mobile banking, how relevant is a specific offer to them, and trying to highlight that specifically for them. So of course we integrate, with all of the major, online banking vendors that you'd think of, the Alchemies, Candescents, Lumens of the world. And this is kind of what it looks like to an extent when somebody logs in, let's say on, a desktop, where they would immediately see some sort of offer section right forefront on their home screen. It might be a moving carousel. It'll grab the eye of the member, that kind of thing. A big deal is writing software that is super easy for a person to understand what is going on and take action on that. A big thing, right, is even always being mobile first, right? The majority of your members are logging into online and mobile banking on their mobile device. And of course, there's even less space when they're on that mobile device. So this is kind of where the AI model really comes into play, right? Because let's say you have 15, 20 offers generated for a member, they're realistically not going to see them all. So the question becomes, what do you display to that member in that first second and third slot, right? You really have to make sure it's relevant to them. So this is kind of where you can see, boom, we shoot that offer right at the top. This person is most likely interested in auto and maybe a personal loan second. So then the next thing is, after you've figured out what that member actually is interested in, how do you make it so easy and seamless for them to accept that offer? So this is essentially what, one of our applications would look like. This is the entire thing, right? There's not a second or third or fourth page. We're not going to ask them for any information that we already have on them, right? We're doing SSOs. We have integrations, done with even data warehouses or cores or wherever we need to get whatever data we need. We're not going to ask them for their name, their email, their social, their address, all that kind of stuff, right? We already have all that information. Each time you add a new field to an application, you're going to get drop off. Each time they have to go to a new page, you're going to get drop off. Each time they have to scroll to see the accept offer button, the main call to action that you want them to take, you're going to get drop off, right? So adding all of these things in is really, really important. So another big thing that we wanted to highlight and build into the product is reporting and analytics. Jumping into the analytics, even thinking on that last slide of how people were looking at the application, what we're doing is we're actually tracking how the member is actually progressing through the apps. So you can see how many members are actually viewing specific offers, how many of them started filling out the form, and how many actually ended up actually clicking that apply or accept offer or whatever call to action that you want them to do. And from there, you can actually utilize these analytics to see the members that are interested in these products and even potentially follow up with them afterwards. Another big thing, right, is the reporting aspect. We don't ever want to have you questioning, right, of like where things are coming from, what offers are going on. So we built this big reporting dashboard, so to speak, where you can see exactly how many members had offers, what the acceptance rates are, what the total amounts funded would be. And we break it down by products as well. So you could say, okay, you could look at vehicles, personals, and credit cards all separately. And you can see how many people actually applied, how many people got approved, how many people got funded, the percentages funded, the amounts, all the way across. We intentionally make the software, even this internal portal, extremely easy to use, because if the employees of the credit union are struggling using it, right, then it's never going to be effective. So that's a big aspect of what we've been building. So let's say you even need to go in and adjust rates. You just go in, click the product, change the rate, and click save, right? Super easy. And as I was mentioning in that previous slide of even analytics, right? What do you do with those analytics? We ended up building in the actual software a way where you can come in and set automated follow-up rules to start automatically retargeting members that have lapsed, right? Because we have all this interaction data, you can start sending them messages to say, hey, come back and finish that auto loan, get them to entice them to actually complete that step that you want them to take. So at a super high level, it's actually pretty quick and easy to deploy. It takes, a few weeks probably and very, very minimal IT involvement. Because we have all of these integrations already done, it's pretty straightforward. And of course, as we've mentioned, our go-to-market strategy is that you won't pay anything unless we're actually getting results for you, right? So no implementation fees, no upfront fees, no nothing. You're only going to pay for results. So it keeps us completely aligned with our customers, which is what we want. So if anybody is interested, in driving organic growth, please reach out to us. We'd love to chat with you.
While you think of your questions, I do actually have a couple of questions. What's the implementation lead time for the product?
Yeah, so that's a great question, right? So we get that all the time. So I think based on sort of the integrations we have in place and the flexibility into the product, typical lead times for us are probably 4 to 6 weeks in terms of getting the product deployed. And that's primarily actually the nature of that involvement is also key, right? It's very minimal IT requirements. It's primarily time with sort of underwriting and marketing to get your requirements and set up and configure the platform to your needs.
Okay, and I guess this one would be for Brian. How quickly did you see an ROI once you implemented Confer?
Yeah. Once it was implemented, I mean, we saw, I guess there's a couple different ways of thinking about ROI. Like from a business perspective, when your first campaign goes live, you see the increase in volume in, matter of weeks, right? And it starts with applications and then it works through kind of the approved state into the funded process. But you can see it pretty much in the first couple of weeks. And I'm sure every institution is going to have a different way of calculating ROI, but for us, it was a direct comparison of what's the increase in volume and what would it have cost us to purchase this through an indirect channel or another, if we wanted to acquire this volume in other ways, how would we have done it and what was the ROI? So from that standpoint, your first funded loan, there is positive value. But, in the first campaign alone, we saw a very positive ROI from a total dollar standpoint. And I think that's the one thing we have hit on a few times, but I don't want to undersell the value. When you're only charged based on funded loan volume, it's a really unique where you don't have to make a certain amount in order to overcome a SaaS cost. It really is the first loan should be profitable. The 10,000th loan should be profitable the whole way through.
Okay. There was a question that was dropped in the chat. What is the charged amount on a funded loan?
Yeah, so that's actually it's a funded loan fee, and the particulars of that vary based on the size of the credit union. So it ranges from 80 basis points to under 200 basis points, depending on the size. And once we kind of understand your particulars, we can pin that number down quickly. Again, I think from our perspective, we feel like we can sort of engage quickly and deliver sort of results. And I think seeing a demo in action is probably one of the next best steps for those who are interested. And so please do reach out and we can set that up in short order.
I want to thank Vishal, Nick, and Brian for joining us today and sharing all this great information. If anyone is looking to connect with them and you didn't capture their contact information, please feel free to reach out to me directly.
Thank you.
Thank you, everyone.
Thanks, everyone. Thanks, team.
Thank you.
Bye.